Welcome back, everyone. Here we are heading into November. It's been a while since I've done one of these. So today, three stocks I'm buying heading into November 2020. As always, this will be a video about three stocks that I have bought very recently and will look to continue buying should the prices either stay the same, go lower, or should the fundamentals get better. We'll see. Anyway, here we go. So I have said in the past, and it continues to be true, that I don't always buy new things all that often. And so it's possible you've seen some of these purchases in the past, in past videos. I may have spoken about some. However, I wanted to clarify that these are things that I have bought fairly recently and added to positions in certain cases. So I hope there's enough variety for everyone. But remember, I take risks, and nothing I say here is investment advice. I take risks that I believe are the most rewarding for the risk that I'm taking. So, first company for today is Linamar. Why did I buy more Linamar recently? Well, I did speak about it in the past and I did buy it in the past. But then I spoke about it some more in a video talking about an industrial stock that I expected to double by the end of 2021, I believe is what I said, and I believe that. So when it went down a bit more after the video, I figured I had just done a refresher on the research, liked what I was seeing, and as I presented it to you guys and ladies and gentlemen, I guess, um, I liked it. So I bought a little more when it went down, and I still believe that Linamar is a high quality manufacturer, and they are in the process of growing through diversification, which means that their risks going forward of being impacted by cyclicality get reduced as they have more avenues of revenue and profit. Because that's a big thing for me. I prefer, well, when I'm looking at a company like this, they make a lot of profit and they've been growing their profit. It's not just growing revenue at the cost of, you know, future promises. No, they've made more and more money. And looking forward for Linamar, I believe that as we go forward, we're at a point in the cycle where the revenue and, well, the revenue, sales and earnings should bounce back up. And B, that plus the diversification plus deleveraging should not result in a nice move up higher in the equity while they become less risky. Now, are they risky now? In some ways, you could argue yes. Now, does this risk at all compare with, say, junior minors? No, there's just so many different factors that matter in each case. So while it is in theory risky, I believe that the risk of a permanent loss on something like Linamar is very low compared to the potential reward that I see probably happening. Now, for those who are confused about what I just said about risk and Linamar being risky, well, I say that because all equity is risky. All investments have their own risk, but equity is has its own set of risks. And companies that have more variable earnings are more sensitive to certain things in the economy are by nature riskier. And I just want to be sure that no one's confusing me to say that this is anything like the risk of a company that doesn't have any earnings or something like that, because there are plenty of those companies and plenty of them seem to be doing very well in terms of equity price appreciation in certain markets. But the risk on a stock that doesn't have earnings but is just achieving a multiple on future expectations is far riskier than something like Linamar, for example. But I understand why many of you are viewing this, and many of you are viewing this, those who are familiar with this channel. The feedback I got on the last one, on the industrial video was, yeah, but there's not really enough upside. Okay, okay, I hear you. Which leads me to the next stock I wanted to talk about. Because I've been buying a whole lot more recently. Now, before I sound too enthusiastic or excited about this one, I want to warn you, it's very low volume. Do not just run out and buy because I sound excited. So I'll try not to sound that excited. Anyway, stock number 2 is Verde Agritech. Now, eventually the price of potash, potassium chloride, will need to go up. When? I don't really know. Why is this? This is because the market is currently, the price is a bit depressed, but if we're going to get to a point where more of the current capacity is needed, then the price will need to go up, and it is a growing market. So in that regard, it is probably just a matter of time. However, Verde doesn't really need that to happen because the product they sell is slightly different. The pricing is based on the price of potassium chloride, potash, but it is based on that due to the potassium content, not the um, price of the regular commodity that's sold. Now, why have I bought much more Verde recently? Well, the big thing is they've proved the ability to be consistently profitable in a low price environment. And for me, that's a big deal because it takes the risk of them needing another equity financing and dilution, takes that risk way down. And that barrier, I guess you could say, has allowed me to multiply my position in the company. Because when you look at the biggest risk for big time growth companies, I hate to use words like, well, let's just not use them. One starts with an H. But when we're talking about growth, the big risks are one, valuation risk, two, funding risk. So funding risk is what I was kind of alluding to before in terms of needing to issue more shares for um, more money before the company can become profitable. Once the company is profitable, which Verde has shown the ability to be, they can self-fund the growth. Okay, so I kind of did two first. So let's rewind to one. Valuation risk. If the growth slows massively on some growth companies, the valuation can contract and the share price can fall a lot. Because if we're expecting the sales to double and that's what's being priced in, then if they don't, problems. In this case, however, this is a company with $30 million market cap and about 4.5 million, depends on how well the next quarter goes, depends on if you want to look back or forward. 4.5 million in EBITDA. Now, EBITDA isn't the same as earnings, but when we're talking about refunding capex and future growth, you know, this is a company that's trading at what, 6.5, math here in my head, times EBITDA approximately. So, I mean, that's less than a multiple that seniors would trade at. Now, does it deserve to be given a multiple that senior miners would trade at right now? Probably not. But the point is, there's not an insane amount of valuation contraction risk when you especially consider that right now the prices that were in the recent quarter and the prices that's been getting, they're making money and they're getting this multiple at probably closer to the bottom of the cycle than the top of the cycle, which means that in this case, there's a lot of room for them to have significant success and still undershoot the targets, even if just the price of the commodity that they're not that they're selling, but that's what they're selling is based on. If that price improves, they can still be a success, even if they have a lot of struggles with growing sales, which, I mean, it doesn't really look like they seem to be having yet, at least, and hopefully they don't in the future. But again, skepticism is healthy here, but based on what I'm seeing, I'm really liking what's going on. And thirdly, for today, to the surprise of absolutely no one who is subscribing to the channel and who's been following for a long time, Global Atomic. Now, recently, there's been a bit of weakness in the share price, and so I've just been keeping nibbling. Now, I had, again, this is at a higher cost basis than I had before, but I really like it, and I really like it as a way for adding money to uranium and not being more stressed or more anxious about when will the price move. And I know we're getting to the point where there's less time left. Now exactly how much time, how much longer could this potentially take? I could have all sorts of debates with all sorts of people about what expectations and how much people believe utilities will let whatever get to. The point is, we don't know exactly when. I still think everything is heading in basically the right direction. And as far as Global Atomic, steel is doing decently, so that should be good support for zinc prices, which, they sell zinc, they are profitable, and so that should be helpful. Now, specifically for Global Atomic, the thing to watch out for or to keep an eye on is the availability of EAFD. EAFD, of course, being electric arc furnace dust, the stuff that Global Atomic, via their plant in Turkey, recycles into zinc. Now, the question is, yes, the steel industry, particularly in Turkey and some other places in the world, has bounced back well off the lows. But the question remains of how long until, or will they have enough EAFD to run the plant at full capacity? If so, starting when, will that be a continuous thing? Or B, would they be able to import some if they're not able to get it all locally? And so those are two things that they are working on and probably are worth keeping an eye on. Now, the other thing to note is, of course, with the price of zinc going up, they do get the revaluation on what they've been selling, and so they do get higher received prices. So that should be a nice booster buffer to the profitability. So this is not as dire an issue. It's not a dire issue, but it's just something to keep an eye on while they pay down the upgrade costs. Anyway, everyone, thanks for watching. That's all for today. I know some of this isn't exactly brand new, as I have spoken about these companies at different points in the past. However, I have averaged up recently in the prices that I've been paying for them because I like what's going on, and I think that that's relevant. That buying more at a higher price, I think that's more relevant than not talking about it at all. So for that reason, I did today's video, and I hope you found something useful in it. And until next time, I'd love to hear your thoughts about any of these companies or all of them in the comments below. And until next time, have a great day.